If you're tired of guessing and losing trades, this is for you. Today, I'll show a simple two-indicator strategy on pocket option that helps you spot high-probability trades clearly. Most strategies fail because they try to predict every move. This one is different. It focuses on trend plus confirmation. Two clear signals tell you when to enter, making trading simpler and more consistent. First, let's take any currency pair as an example. Trade during the London or New York sessions when the market is most active. Use 1-minute or 5-minute charts for quick, reliable signals. The reason is simple. High liquidity creates predictable candle patterns you can trust. Step 2 is indicators. For trend, we use two EMAs, the 20 as fast and the 50 as slow. When the 20 EMA is above the 50 EMA, that's an uptrend. When the 20 EMA is below the 50 EMA, that's a downtrend. Next, momentum and confirmation. RSI set to 14. RSI above 50 means bullish confirmation. RSI below 50 means bearish confirmation. And remember, we only take trades when both indicators align. So let's walk through real trades using this setup.
We're seeing the 20 EMA trading above the 50 EMA, which is generally a bullish signal and suggests potential continuation of an uptrend. However, looking at the RSI, it's hovering slightly above the 50 level but doesn't show strong momentum to push higher. Given this weak confirmation, I'd prefer to stay on the sidelines for now and wait to see how price action develops.
Even though the indicators align, the price itself moves against the signal.
At this stage, it doesn't look like a solid entry setup. Let's move on and analyze another currency pair instead.
Once again, the 20 EMA is positioned above the 50 EMA, which gives us the first bullish signal and a potential buy indication. However, RSI is sitting just above the 50 level and moving rather inconsistently. With this lack of stability, the confirmation isn't strong enough. In this case, we'll skip this setup and move on to another currency pair. The 20 EMA is now above the 50 EMA, giving us a bullish signal. RSI also indicates upward momentum, confirming the trend. This is a solid buy signal, so we take the position.
Sellers briefly gained the upper hand, which was interesting to watch.
It really feels like the price is going to push higher.
Buyers are stepping in and price is pushing higher. At the same time, RSI is holding around 70 and ticking upward, with the EMA confirming the momentum. The market is showing strength, pressure is building, and we're riding this wave into the buy position, waiting for the outcome.
Looking at the bigger picture, I'm fully confident in a complete win. The setup is strong, momentum is aligned, and everything points toward buyers dominating this move. That's a winning trade. I think it's time we move on to another currency pair and dive straight into the analysis. Okay, time to flip to a new pair. Let's break it down fast. Now it gets interesting. The 20 EMA is above the 50 EMA, signaling an uptrend. RSI is just over 50, a weak sign, but I'm willing to take the risk. So we're going buy. As the countdown continues, let's talk about indicator confluence. When multiple signals point in the same direction, traders often feel more confident. But here's the catch. Indicators are derived from price, and they can lag. That means RSI and moving averages all agree the market can still move against the trade. This is why experienced traders always confirm with price action. Think of indicators as supporting actors, while price is the main character. If the star of the show decides to improvise, the script changes instantly. So while we wait for this trade to close, remember, confluence is powerful but never absolute. The market writes its own story, and our job is to read it, not to force it.
And while we've been talking, I can see the price is dropping right now, which is not a good sign.
Unfortunately, that risk didn't pay off. Price moved down, but we've got to keep moving, so let's roll. All right, what do we have here? EMA looks the same as in the previous trade, but now RSI is above 50 and sitting at 70. That's a massive uptrend signal.
However, I don't want to trade here. I want to show how EMA plus RSI work in a downtrend.
Right now, we see the 20 EMA below the 50 EMA, and RSI is gradually sliding down. It's a risky setup since RSI hasn't fully confirmed the scenario, but we'll take the chance and go sell. The position is open. Let's see how it plays out. While we wait, let me share something useful. I trade this strategy on Pocket Option. It's quick, simple, and great for practice. There's a link in the description where you can grab a nice deposit bonus. Begin on demo, get comfortable with the setup, and then step into live trades. As we watch the price moving lower, sellers are clearly holding control, and that's a good sign for this setup. If the momentum continues, the trade should close in our favor. Notice how the candles respect the downward pressure. Patience here is key, because letting the move develop naturally often brings the best results. Yes, our risk paid off. Price moved down even though RSI is still around 50. And that's the beauty of this approach. It removes the guesswork. You're not chasing every signal. You're letting the market confirm itself. Clear rules plus simple indicators equal a consistent strategy. If this strategy made sense to you, go ahead and subscribe. Drop a comment with your own results, and I'll bring you an advanced version in the next video. See you there.